Good morning, everyone. Good morning, Lauren. Good morning, CJ.
Morning.
Hey Dave, how
How's
are you?
things?
Good.
Great.
So
Excellent.
it's
Go for a
been,
Friday.
been a couple of weeks between episodes. This morning, we've got CJ on the podcast with Lauren and myself, who's a bona fide, I'm going to call you CJ, expert as an SDA owner. And I'll let you explain, but there's a particular area that you're an expert in. I'd love you to sort of just share why you're here today and what makes you this expert that I'm holding you out to be. And we want to talk about some landlord protections during this episode.
Yeah, thanks, David. Yeah, so as David alluded to, I'm a SDA property owner as well, but I'm also a general insurance broker. So come from quite a lot of experience in that background. And we first built our first SDA properties in 2022 when the industry was very, very new. Insurance does not keep up with the times. It's a very slow to react industry. And SDA property insurance is one of those areas that is probably a little bit too complicated for the insurers to handle without a lot of time elapsing between when it started. And yeah, it was very difficult to find insurance cover. So I've worked a lot with a lot of the people in the industry that are building these covers, giving the information to the insurer to understand how SDA properties work. And I also deal with a lot of clients that have, SDA properties that almost the majority of which have the wrong cover. They're not really sure why. And that's sort of a pretty important part is it's all well and good to have insurance, but if it doesn't cover anything, there's not much point in having it.
CJ, you got a taste for yourself. We were originally scheduled to record this interview 2 weeks ago today. And the morning that we were due to record, you sent me a text and said, mate, I need to reschedule. Someone's broken into my apartment block and turned a fire hose on. The place is flooded.
It's an
Yeah,
interesting morning
it's
we've had, I'm sure.
it's a great segue into insurance.
Really, and look, a lot of the properties that we manage, and a lot of SDA properties are apartments, so it's not just insurance isn't just something that is related to maybe damage from an SDA participant or related to wear and tear from their apparatus. You're living in accommodation that you're subject to all of the weird stuff that goes on with all of the people in the world who break in and turn fire hoses on. And what have you estimated? Sort of five or seven
Yeah, it's
hundred
about
thousand in damage.
600 grand in damage to the building in 4 minutes. So yeah, it's one of those things, like you said, people always think, a fire or a storm or a hail, damage, something like that. But literally minor things can happen that you don't even contemplate in your day to day. And that particular thing probably displaced 20, 30 people in the building.
Wow.
And like I said, I was the one that turned off the fire hydrant to stop it from flooding the rest of the building. So I know when it started to when it ended, and it was about 4 minutes.
Wow. That's amazing.
So it really sort of puts some color on today's topic. So, CJ, what are the so you built your first property in 2022. You don't need to go into the where and the what, but what are some lessons that you picked up along the way as an owner, working with builders, the whole process? What have you learned during the construction process, even before construction? If you're going to do it again, would you do anything different? Working with SDA providers, what are your takeaways?
Yeah, so the best thing I always say to people, and again, I speak to at least 10 to 20 owners a week from an insurance point of view. The issue being is that obviously if they're calling me for insurance, they've probably already built the place. So I can't really help them, with those first steps.
Uh-huh.
But I always say the same thing. SDA property is a high risk, high reward asset class. It's one of those things where the returns can be great, but you have to be able to take the pain that could potentially happen when it comes to vacancy, when it comes to, potentially not getting the rent that you've been told you were going to get.
Mm-hmm.
And so if setting expectations there, I think is a lot more realistic place to start than where a lot of the people, whether it's, the salespeople or anything like that are starting. And as you can probably appreciate, it's you guys that have to break the bad news when it doesn't work out exactly how they thought it was going to happen. And, a lot of the providers, there's been a lot of cleanup in the industry, if you want to call it that, over the last couple of years. But when it first started and it was a brand new thing, there's a lot of people promising enormous returns. You can get people in there, they'll pay you 200 grand a year, all that sort of stuff.
Yeah.
And, from our experience, we worked with a provider and essentially built them exactly what they asked for, and they were unable to provide participants. And hindsight being 2020, you look at it now and think, well, there's actually no facilities in that particular place to support the participants that were supposed to go in this place.
Yeah. Yeah.
Yeah, no, that was a robust. We had a chat off camera. And so you work with the provider and they said, hey, we really want a robust property in this town, this location, whatever it was, right? You went, okay. And you did it. And there's no infrastructure to support robust participants nearby. But again, it's such an easy mistake to make. You ring up, you think you're doing your due diligence. You're talking to the people who are supposed to be the ones who will then manage it. And say, yep, this is what our data says is the demand. You do it, then they go, sorry, can't help you, right? And that's a bad beat, CJ. That's a hard one.
Yeah.
Yeah, and we were experienced property investors too. This wasn't our first property
Mhm.
investment. We've done plenty of standard residential developments. We own a property management agency, so we have our fingers on the pulse to a degree. And yeah, it could happen to anyone. And again, consolidation aside, the Wild West of 2022 is probably not where we're at today. People are a bit more
It's a very
knowledgeable.
different landscape. Yeah, it really is. Mate, you've said a couple of things I want to sort of dig into a little bit. Something you said, and I remember I was speaking with a lady yesterday who's looking to purchase a built SDA property, asking about demand and all the stuff that we're talking here. And I said, look, this particular area, there is a little bit of vacancy. I'm sure that we can over time find you some tenants and we will fill it. But you got to understand, madam, it's high risk, high reward. So we might say, hey, you need to go to the general market for 6 months or a year to get some revenue while the market demand catches up. Since, like you said, that since 2022, the number of properties being built has slowed. And so we are seeing these areas fill.
Yeah.
If you're buying this property today, we're saying it could be 6 to 12 months before we realistically find a tenant for this property. So you're going to have to take care of your revenue. So high risk, high reward. So it's really great to hear you say that, right? And if you're having these conversations with owners from the broker's perspective every week, it's good to get that message out there. Because like you've articulated, so many of these sales agents, they had their shiny red boots on and they would tell people, we'll get you 18% returns. And it was absolute fantasy. Absolute fantasy.
Yeah,
Like,
18% when it's rented.
maybe.
Full
Right?
capacity as per
Yeah.
its complete enrollment.
At
Yeah.
maximum.
I'd love to get the data on how many SDAs in the country are completely fully optimized to their
Yeah.
maximum
Yeah.
enrolled
It would
occupancy.
be quite a small percentage, but
Yeah.
and again, it's a expectation thing, which is what I'm trying to talk to them about.
Yeah. And, we explain the same thing. It's sort of, like your maximum enrolled value is the needle in a haystack or the ideal outcome. However, the reality is the data suggests, that we're collecting is that participants are coming through with XYZ outcome, and that is an average of this. So, this is what you're probably going to get when we ring and say, yep, okay, here's your first tenant application. It's in this range, rather than sort of going in like, oh yeah, we'll find someone at your exact enrolled value within a very short time frame. I mean, it's great when it happens, and it does happen, but it's good to hear others setting expectations that are more in line with what's actually happening on a larger scale.
Yeah, and these sort of experiences, again, to segue into the insurance side, these are the things that the insurers don't necessarily understand. So SDA properties sit in a nice little, well, not nice, but a grey area between residential and commercial property.
Yeah.
So
they do.
they're a residential property effectively in a residential area, but it's actually a lease for commercial purposes. So majority of the leases are commercial leases, and they are between the SDA provider and the owner. And then the provider finds the participant, they have a SIL provider or a care provider, and that tends to be the scenario. So the insurers that deal with landlord insurance, where the owner leases directly to the
Yep.
is how they think about it. And a commercial lease is a little bit more flexible because you might have a place that's leased on a head lease for 5 different places, and then individually leased from the head leasee to the rest. So it's a lot more aligned with that.
Yeah.
And the comparison I really tell people is it's actually more like a hotel than it is a property, like a normal landlord property, because in a normal landlord scenario, you really do have that connection lease directly with that tenant. Where in these scenarios, you're more leasing to the hotel operator, which, it essentially is the SDA provider.
Mm.
And then they're putting people in, on your behalf, obviously communicating with you, but they're more like the hotel provider in that their responsibility is to maintain the place, make sure people are checked in correctly, et cetera.
Yeah.
What about analogy? I've never heard anyone describe it like that. It's
Yeah.
it's not a bad one. I get it. You,
So
you got well, CJ, you're the best person to answer this question. The difference between premiums for residential landlord insurance versus commercial motel, right? What can you talk to about that?
yeah, it's a huge difference in risk.
Right. Right.
It's also, and again, insurance is an industry where data is the real, indicator of risk. Insurers spend their entire lives going through spreadsheets and doing things to work out what the price of everything should be.
Mm.
And with a new asset class, especially one that fits between two gray areas where there's not really a good comparison, that's where the industry falls down in terms of pricing because there's no data. Lloyd's has amazing data in ship insurance. They've been doing it for 300 years, so they can tell you all about it. But this one they can't.
What would an average SDA insurance policy cost an owner for, a standard sort of residential house?
So it sort of starts around $3,500 for a starting point.
Mm-hmm.
The way I normally explain it to people is if you've got a landlord property, a policy as a comparison point, because that does tend to be the comparison point that they look at, it's about double.
Okay.
But the way I always explain that to them is generally the rent is also double. It almost works out to be coinciding with the same thing. So just like what we were talking about before, high risk, high reward, the premiums are more, but they also coverage needs to be more.
That's right.
And yeah.
And I have two specific questions for you because these are questions that I think landlords sort of mention or are concerned about. And I don't know the answers and usually just refer out to the industry. So I'm pleased I can now refer to you. First question, we've had a couple of instances where owners have said, if my property is vacant for more than, I think it's 60 days, then they need to, we need to write a supporting letter saying that we are marketing the property and these are the activities we've undertaken. Is that something you've come across before? And is that 60-day guideline accurate?
Yeah, so that's a landlord guideline. So that's a standard landlord policy condition. It's either 60, 90 or 120, depending on the insurer.
Okay.
And that's a very standard thing. And insurers do not want to insure vacant property.
Yeah. Yeah.
The risk is higher, squatters, the security, et cetera, et cetera. Now, this is where I've had extensive conversations with the insurers regarding vacant properties. And what is a vacant property?
What's the expected? How can we adjust that to be in line with the norm? Yeah.
Because I know from our experience, with our properties previously, they were vacant for quite some time. They might be vacant. I do have a lease with a provider. So therefore the property is leased, which is, subject to some legal advice, potentially means that the property is not vacant in the sense that it's vacant.
Okay.
That's an interesting distinction that I hadn't thought of that.
So just to let you know, I spoke directly with an insurer about this exact scenario. And I said, if I've got a commercial property, let's say it's a cafe, right? And I sign a lease with a tenant and they pay me money, but they don't move in.
Mm-hmm.
So I've got a place, someone's paying me money. I can't force them to move into the property.
Yep.
Is that property vacant or is it tenanted? And essentially it's what they call a soft risk, meaning it's not something that they can generally underwrite against. But yeah, it's vacant in the sense from a risk point of view, but it's not actually vacant in the sense that no one is responsible for the property, I think is a clear part. The SDA provider has, a responsibility to keep the property maintained, keep, everything working and secure and all that sort of stuff. And that's the main issue with the SDA property insurance is the vacancies can be extensive. And when I was explaining it to them, I said, it's not because the landlords want them to be vacant. Very much the opposite.
Yeah.
Very much the opposite. It's that a plan can take quite a long time to be approved. So you may have a participant who is ready to move in tomorrow.
Mhm.
It's not an issue of demand or availability. It's
Mhm.
just that the agency may take some time to approve that plan,
Mm.
and you don't really have any oversight or control over how long that takes.
Yep.
And so when the property is vacant as such or not leased, a lot of the time can be spent in that. And if you set a time frame, so it's 3 months or whatever,
Mm.
you could get to 89 days. You've got a tenant ready to go lined up, and all you're waiting for is approval. But now your property's not insured.
Mm.
It's a very hard thing to do in this industry. With a normal residential property, you can just drop the rent until someone moves in. Supply
So
and demand will
what's
kick in.
been the insurer's response to that? But when you sort of lay it out like that, and it makes so much sense, and when you lay it out like a commercial risk, it's a commercial residential kind of asset. It is that sort of grey in the middle asset class. When you lay that out and they start to understand what it is they're insuring, how are they responding?
Yeah, so still not great. I will say that
I was really hoping for something like, oh, you know what,
I have some positives. I've got some positives. Don't worry. But yeah, so insurance people are very risk adverse. Just so you know, that they're not. They have a stereotype, and it is very much that. But yeah, the things were going well. Was working with one of the other underwriting agencies, and she's got a product that's fit for purpose, and that's the key part as well.
Yep.
The policies need to be fit for purpose, and a landlord property is not. We can go into that after, but everything was going great. The Four Corners episode that happened last year, which was sort of outlining a lot of these vacant properties, especially in regional Victoria, I think was the main sort of focus. That spooked them to a degree. Keeping in mind that throughout the whole process, we were very honest with them, just like I've spoken about here, about what an SDA property is, but that spooked them to a degree. So that has caused some ripples, and it's only recently in the last couple of months, and I've been working on it for years, that we've managed to work with an insurer to get an agreed endorsement, we call them. So conditions as to while the property is vacant, what needs to happen. So the property needs to be secured. It needs to have the gas turned off, the water turned off, so that, things don't happen for that. And someone needs to be visiting the property on a regular basis, and the excess will be higher than the standard excess. So those conditions, I think, pretty much knock out any claim scenario that doesn't involve a catastrophe. So a hailstorm, a bushfire, things like that.
Yeah.
And if they abide by those, I don't really see the difference in the risk, to be quite frank, between whether it's vacant or not with the increased excess. So it's only been, very recently that we've managed to work with the insurers to get that over the line.
So is that a product now that someone's offering, that particular insurance?
Yeah, so it's a product that I've been working on directly with one of the large insurers in Australia. It's not quite ready for
I
the
was going to
prime
say,
time
are you
yet.
able to share what it is yet? Can we
Yeah,
sort of? I'm seeing newsletters out to the entire database. That's sort of where my head just went.
It is very close, and that insurer does already write this business. I think the key part is that they don't fully understand the business until we sort of had a lot of our discussions. And yeah, so I would love to send it out there to everyone. And even when it's ready, it probably won't be, mass market ready for a while. We go through some testing, but we have made a lot of progress on the product and the
Well, look,
understanding
hey,
from
if
the
we
insurer.
can be of any assistance to those conversations with the underwriter, please just let us know. We're happy to jump around a table and talk through how we see it.
Yep.
The
No
more the
problem.
better.
Yeah.
It's I also think from a insurance broking point of view, it's very rare for someone to understand the industry as well unless they've been in it.
Yeah, I'm sitting here thinking to myself, CJ knows what he's talking about, and it's not a normal conversation to have with someone outside SDA. It's really not. I spoke with a marketer a couple of weeks ago who really understood it, and that was a bit like I was really
Can I
taken
get
aback.
his name? Because I'm still waiting.
No.
It's not normal to have conversations outside even silk providers. A lot of silk providers and support coordinators, there's a real lack of deep understanding about what SDA is and how it can really support their businesses, which is a shame because there's so much work that we can all do together.
I think
So I don't know about you, Lauren, but I'm sitting here going, CJ has been through the ring here. I can hear it.
Yeah, yeah, and you know what you're doing, and I think that that's such an asset to owners that perhaps don't know and haven't learnt those lessons yet, and to have somebody on their side that really knows the risks and how to best protect them is really really great. I wanted to divert to my second question, which leads a little bit away from where we've been dwelling. I think, from a property management perspective, we come across, property maintenance requests and property damage and this kind of stuff every day, like in our day-to-day, that's part of the role. From your perspective, what would be the biggest risks for owners that you've seen in terms of insurance claims?
Well, the biggest risk, to be honest, is all the same risks that every property has ever. Hailstorms, you cannot underwrite against hailstorms. You can try, but we had those hailstorms at the October last year,
Yeah.
and
I'm
that
still
was
going
two.
through claims for that. One of my properties got nailed. The solar
Yep,
panels are not fixed yet. The roof's not fixed yet.
that was $2.4 billion in damage.
Yeah,
That hailstorm.
yeah, still going through
Um,
it.
Wow.
so it doesn't take long, to get something like that. So those are the
That was
biggest
like a
risks.
15-minute supercell, man, and
Yep.
2.5 billion. That's
Yep.
wild.
That's
Yeah,
insane.
but that whole period, it wasn't from the one store, but yeah, that how quickly that sort of money can be expended is crazy. So definitely those catastrophe risks, we call them, are the most common risks to
Mm.
be there. But outside of the things that you can't really control, there's been a few claims, and this is going back years when the industry didn't really sort of exist in the insurance side. And we had a robust claim that happened. It was another broker, it wasn't one of mine, where the participant had an episode.
Mm.
They effectively made a Molotov cocktail and they climbed up on the roof and threw it down into the roof cavity.
Oh, dear.
So that was a large claim, and that claim actually got declined because it was put through incorrectly through a business insurance policy, but as the wrong occupation. So,
Yeah. Okay. So the risk is getting that detail correct when you're actually bringing a property into that insurance policy is
Yeah.
making sure somebody who knows what they're talking about is ticking the right boxes.
and
We were
that
having this chat off camera, CJ. I think, Loz, you hadn't joined yet, but and we spoke about it before the last failed recording attempt, that if we've seen, and Lauren, you and I see this, we see owners come to us, they're getting finance either to purchase an existing property or build one, and the bank routinely says, "Hey, show us your insurance coverage," and they ask the questions and they hit these questions that CJ's talking about, and eventually they find someone who goes, "Oh yeah, sure," and here's your cover note and here's your policy, but it's not specific to SDA. It doesn't cover businesses operating out of the home. It doesn't cover that commercial type head lease and sublets. It doesn't cover it. And if you've ever read your PDS from an insurance company, it says if the details in this policy, I'll ad lib, but if the details in this policy are not correct, one of the things we may do is treat the policy as it never existed, right? And so if you're an SDA landlord and you've just got some cover note thinking that you're covered like a standard residential landlord's coverage, you're not covered. And
No,
that's
and
why
the
the
so
conversation with CJ is
complex.
so important.
the
Yeah.
biggest part and the thing that I normally talk to clients about is, in a normal residential landlord policy, you have a cover called loss of rent. And it's a
Mm.
very standardized sort of term within the landlord industry. And what that actually covers come
They're
claim
using.
time, yeah, come claim time, is a loss of rent based on lease at the property.
Mm.
So, with residential landlord, it's very easy. If the property's never been leased, for example, you can still pretty much get a market rent fairly
Mm.
easily.
Mm.
However, what a claim at an SDA property does actually occur is something in the business world called business interruption, because the business is the leasing of a SDA property. And being that the lease is usually a pass-through lease,
Mm.
there is no document that says my rent is this. Is effectively a business in the sense that you can have a shop that sells one coffee or 1,000 coffees. So you work out the rough figure, and that's what the business interruption covers.
Mm.
It's not a set figure. And that's a key distinction, that those insurers that have been insuring these properties, they will use that to get out of paying loss of rent.
Mm.
Some of them may pay. Look, insurance is an industry where I see things that amaze me on the daily, whether it's an insurer saying, no, we don't do that. And then 5 minutes later, I get a policy from someone else with that insurer. It does happen,
Sounds like
but I
working
would,
for EDIS.
yeah,
Or
exactly.
or who are an insurer.
Yeah.
Go figure.
And I also have this scenario where, they've called up the insurer, they've explained it all to them, and the person at the call center tells them, yep, that's no worries. Now, the issue with that is all of the public insurers, they can tell you whatever they want. They have no obligation at all to tell you, but they can't give you advice, so they can't, take your financial situation. And if they say something, you still have to go and do the research into the PDS to find out whether that's correct or not.
To prove that it is, just in
Prove
case.
that it is.
So
Whereas
they can tell you that the color red is actually blue, and if you believe them, great. But if the PDS says no,
It's
blue
red.
is blue, red is red, then that's what it is.
An insurance broker, we are the opposite. We have a fiduciary duty to the client to, ensure that the cover is correct. And obviously we have, insurance cover for when we're not correct. But that's the difference. And I have definitely seen it with a few of the public insurers where I've done the quote up for them. Like I said, it's double the price, and I'm very upfront about that as to what that looks like.
Yeah.
And they've gone and said, well, I got this quote from XYZ, and I spoke to them and they said it's all good.
Yeah. Yeah.
But come claim time is the only time you discover whether or not you have cover.
If you're, I hope if you find yourself listening to this podcast, and I've been surprised lately that people I'm talking to say, I listen to the podcast, which is great. But if you're a landlord listening to this podcast, please dial in.
Yeah.
Listen, read through the PDS with a microscope. It's very likely that what you think you're covered for, you're not. I'm not saying it's definite, but it's probable. And look, I'm a big fan of brokers in general. I'm a big fan of insurance brokers. I'm a big fan of finance brokers. They're such a time lever. And because it's your bread and butter, it's your daily, you know so much more about it than I ever will.
Yeah.
So, people go out and they try and call 6 different banks for finance. All they do is trash their credit rating, or they ring 6 different insurance agencies and get all this different information. Whereas you can call one broker who works with all these guys, knows the intricacies of all their policies, and you speed your time up so much. So it's really powerful what you're saying here, CJ.
Yeah, I
think
agree.
as well, another point is irrelevant of anything in the PDS. There is a very fine, very strict line in insurance when it comes to residential or domestic insurance, it's called, and commercial. And that line is actually drawn by the reinsurers. It's not drawn by the insurers themselves. So the treaty that the insurer may have with their reinsurer is for domestic insurance or it's for commercial insurance. And on a residential landlord policy, when you have a business scenario, which is what an SDA property is, it actually may invalidate the reinsurance treaty that the insurer has with their reinsurer because it is not a domestic risk. So irrelevant of anything the insurer says, if a hailstorm comes through, and that will be a reinsurance claim most likely, potentially if someone really looked into it, which they may not because of this, we're talking about big numbers here, technically that may actually invalidate their reinsurance treaty.
But if it's a big claim, if it's a big Molotov cocktail in the roof claim where it could be hundreds of thousands, then they do look closely. If it's
absolutely
10 or 20 grand, maybe not.
100%. And
if it's a rebuild, if it's a complete write-off, it's going to get looked at hard. And that's when you need the policy most to be tight.
And people definitely told me, I've had a claim. I'm sure you guys would have seen it as well. A minor storm damage claim for 10 grand, you
goes
get
through,
quotes,
no problem.
and it goes through and no one looks into it. And that, irrelevant of the policy, I can sit here and say you're not covered, but the insurer pays, then you are covered. I guess you can't really argue with that. But it is those big claims. And I've had, very large claims over the years. It's very different processing a $10,000 claim to a $10 million claim.
Yeah.
And the people involved are quite different.
Yeah.
Because insurers don't want to pay those big numbers. They will look into it and they will find reasons not to pay, right?
It's
because
more
that's the business.
The $10,000 claim, if you put a lawyer and a loss adjuster on it, you might spend $5,000 in costs to save, $2,000. But at 10 million, that's a lot of time for lawyers and loss adjusters to get involved. To actually save the insurer money. So
look, now just before we wrap up, there's something you said a while back towards 20 minutes ago, CJ, and you were talking about when you mentioned high risk, high reward. You also said that the SDA properties you built weren't your first properties. You're an experienced property owner and property manager. What's your advice to someone looking to get into SDA about their level of sophistication in investment?
Definitely do not take what you hear for granted from one, maybe 5 people. maybe, do a bit of your own research, look at the industry, go on to Housing Hub, go on to, these listing websites, which again didn't exist in 2022. So, you use the tools that are available now and have a look at what properties are on there in your area and see how long they've been vacant. See if you can see what the listing date is. If you can afford to have a property vacant for 12 months, then that's probably the only time I would say to get into this asset class, to be honest. You need to plan for 12 months of pain for you to, get that return.
That's good advice. So if you're purchasing a property at $1 million and interest is, 7%, you've got plus all your council and
100 grand in the
insurance.
bank.
That's right. You need $100,000 in your skyrocket just to sort of be ready, right? After you settle. This is not before.
If that's where your
settlement.
expectations are, then you will not be disappointed.
Yeah.
To a degree. But yeah, I think a lot of people that I speak to, they purchase these things, and they're expecting those returns within 6 weeks.
Yeah.
And it gets to 12 weeks and they really can't afford them anymore, and then they can't sell them. It gets tough. And I've been there. So, I
was speaking to a gentleman just a few weeks ago who purchased 3 of these. He had a couple of properties, but he wasn't really sophisticated. He was talked into purchasing 3. They're all in not great areas. They're all vacant. He's carrying in 20 grand a month in holding costs. He's in a bad spot. And so it really does break our heart when we need to support people in that situation. We work very hard to try and do something, and ultimately sometimes it doesn't work out. So CJ, this has been such a good conversation. The advice and experience that you've got, it's really just coming through. You can, like I said earlier, it's clear that you've been on the court building these things, working with providers, tenants in these things, working out how to get them covered, carrying the vacancy. It's super clear. And look, I'd love to get you back at some point. Certainly, once we get this insurance thing worked out and that product worked out, I'd love to get you back on so we can talk about it, because I think it's something that's really, really important for a lot of landlords out there to have this right policy. Now, might it cost you a few extra bucks? It sounds like it probably will. However, the few extra bucks, if there's a catastrophic event, will pay for itself. So,
yeah.
Can
I suggest, CJ, that we grab or you tell everyone that's listening your best place to reach out? Because I think there'd be a lot of landlords really interested in having a conversation with you and auditing their current insurance policy, or starting from scratch with you.
Yeah, so a majority of this stuff actually works through ndisinsurance.com.au. So it's very, very easy to find, and my mobile number is on there, so feel free to give me a ring.
Okay, right.
And I will get back to you. I do get a lot of calls every day, so I apologize if I don't answer
like
immediately.
I'll pop up that website on the screen.
Yeah, excellent. And we look forward to a second round of conversations.
100%. I'd love to.
Yeah, and seeing how this new policymaker goes, and how it can help the landlords actually understand the industry. That would be great.
Awesome. CJ, thanks so much for your time, mate. We'll pause it there. And Loz, thank you, and we'll speak later. Thanks, everyone.
Thanks, guys.
Thanks.